Sometimes a chart looks completely normal, until suddenly the trend shifts, and you're left wondering why you didn't see it coming. It happens to everyone, but there's a simple way to catch those early changes without guessing. Today, I'm going to show you a tool that reacts insanely fast to momentum shifts and a strategy built around it that gives you clear, low-risk entries. Give me a few minutes and I'll walk you through everything step by step so you know exactly when to enter, when to stay out, and how to avoid the traps most traders fall for. Now let's start setting this up on the chart. I'm on TradingView, and the first thing we add on our trading chart is called the Hull Moving Average. Click Indicators and search for Hull Suite by Encelico. Add this one to the trading chart. When it loads, the default settings are close but not fully optimized for what we want. So open the settings. You can do that from here. The length is 55 by default, and we keep that as it is because it gives us a great balance between speed and stability. Then set the length multiplier to 3 so the HMA becomes more responsive. After that, make sure the higher time frame option matches the time frame you're trading on. For example, if I'm on the 1-hour chart, the default 4-hour higher time frame is correct. If you switch time frames, remember the rule. Always use a multiple of 3, 4, 5, or 6. That means if you're on 1 minute, you can set it to 5 minutes. On 5 minutes, set it to 15 minutes. On 15 minutes, set it to 1 hour. On 1 hour, set it to 4 hours. On 4 hours, use the daily time frame. This keeps your Hull moving average aligned with broader momentum. After you apply the settings, you'll instantly notice how quickly the HMA flips color when the market changes direction. Now we need to add the rest of our moving averages. Go to Indicators again and search for Moving Average Ribbon. This built-in indicator gives us multiple EMAs in one tool. After you have added it to the trading chart, open the settings. You can do that from here. And then first of all, remove one of the EMAs because we only need 3 of them. 2 must be exponential moving averages, and 1 must be a simple moving average. So set the first 2 to EMA and the third one to SMA. For the EMA lengths, set the first one to 5 and the second one to 8. For the SMA, set the length to 200, because this will act as our main trend filter and midterm reference level. Then we assign colors to keep the chart readable. Go to the Style section and change the color of the EMA 5 to white. The EMA 8 should be orange, and the SMA 200 should be blue. Finally, increase their thickness so they're clearly visible. Now the full system is ready on the chart. We have the Hull moving average flipping between green and red depending on trend direction. We have the SMA 200 marking longer-term direction, and we have the 5 and 8 EMA lines giving us signals inside the trend.
Do you feel like everyone around you benefits from artificial intelligence, but you have no idea where to start? Don't wait any longer. Start today. Our free trading bot is simple to use, powered by artificial intelligence, and can earn you up to 1% profit every single day. Over 500 members have already joined. Click the link below now to get free access. This is your chance to harness the power of AI and take a step toward a financial boost.
The Hull moving average is the backbone of the system. When it's green, we only look for buy positions, and when it's red, we only look for sell positions. Then, the SMA 200 acts like a major trend filter. Price must be on the correct side of the SMA 200 before you even think of entering a trade. And the 2 EMAs, 5 and 8, tell us when a pullback begins and when it ends. So now let me walk you through the sell trade setup first, then the buy setup, and then I'll show more examples so everything becomes clear. A valid sell setup begins when the Hull moving average flips from green to red. That's our first early warning that a possible downtrend is forming. But we don't enter just because the HMA turns red. In the next step, the price must move below the SMA 200, and both EMAs, white and orange, must also cross below the SMA 200, just like we can see happened over here. This tells us that not only is the HMA signaling weakness, but the broader trend is shifting too. After this alignment, we wait for a pullback toward the blue 200 SMA. One of the easiest ways to spot this pullback is to watch the white EMA 5 cross above the orange EMA 8. That small crossover shows short-term upside momentum, meaning price is pulling back inside a larger downtrend. But again, we don't enter yet. We wait for the pullback to end, and that happens when the white EMA crosses back below the orange EMA. Once the candle closes and the white line is clearly under the orange, the sell signal is confirmed, and we enter the sell position at the open of the next candle. The stop loss goes above the pullback high, and the take profit is set to a 1:2 risk-to-reward ratio. And to reduce risk even further, we only take the first pullback after the trend shift. Multiple pullbacks later in the trend can still work, but they also carry a higher chance of reversing, so this strategy focuses on the cleanest and safest entry. Now for the buy setup, we simply flip every condition. First, the Hull moving average must change from red to green. This tells us that momentum is turning bullish. In the next step, the price, the white EMA, and the orange EMA must cross above the SMA 200. Once this alignment happens, we wait for a pullback to the SMA 200. Just like before, the white EMA crossing below the orange EMA shows the pullback forming. Now we wait for the white EMA to close back above the orange EMA. When that happens, the buy setup is confirmed and we can enter the trade at the next candle. The stop loss goes under the pullback low and take profit at 1:2. And again, we only focus on the first pullback for the cleanest, low-risk entry. Now let's walk through more examples so you fully understand how this looks in real time. In this part of the chart, you can see the Hull moving average flips from green to red, so we begin watching for a sell setup. Price then moves below the SMA 200, and both EMAs drop below it as well. Exactly what we want. Then price pulls back and the white EMA goes above the orange EMA, showing the correction. When the white EMA crosses back below the orange, the pullback ends. That candle gives us the confirmed sell signal. We take the sell position, set the stop loss above the pullback, and target a 1:2 reward. Price moves down cleanly and completes the trade. These examples repeat again and again across markets and timeframes because the logic is simple. Enter the first pullback after a major trend shift, and let the EMAs guide you. But even though this strategy is extremely accurate, nothing in trading is 100% guaranteed. Reversal points and choppy ranges can still create false signals, and no matter how strong a strategy is, proper risk management is what keeps you profitable long-term. That's the full strategy. If you have any questions, ask me in the comments. And if you haven't subscribed yet, make sure you subscribe and turn on notifications. Thanks for watching the video till the end. I'll see you guys in the next video.